Let's talk about what war really does to the stock market. Hi, I'm Dave Lopez.
And I'm Chase Lopez, and we're financial advisors with ILG Financial. And this is another episode of Retiring Your Way with ILG Financial, where we talk all things retirement. Now, Dave, before we jump in, just want to remind everyone, go ahead and hit the like and subscribe button down below so you can get notifications for all of our future videos. So, Dave, why don't we jump right in?
Yeah, we're talking about war and what it does to the market. So war breaks out, markets panic. That's probably not a surprise to anybody, right? But here's the surprising part. What history tells us is that war doesn't actually destroy markets in the long term. Okay, today we're going to break down over 100 years of data and war and military conflicts and take a look at the big question. That big question is, what really happens to the stock market during wars or military actions? And more importantly, and this is the big takeaway that I want you to get from this video, what should you do as an investor?
All right, yeah, so let's jump right in, right? So when a major military conflict begins, typically markets react very fast. And typically that initial first reaction is both fast and not very good, okay? So let's look at an example. So take the attack on Pearl Harbor in 1941. The S&P 500 dropped 6% in 5 days. That's one of the sharpest short-term reactions ever recorded on record. And this pattern repeats throughout history. Sudden uncertainty, then panic selling, then sharp short-term declines. But here's the key insight, is that these drops, they rarely last.
Yeah, despite the initial drop or panic, if you're talking about really what's going on, what we see is quite remarkable, and it is resilience. Over time, the dust settles and the markets recover, right? As the fear fades, people move back into the market and it recovers. Why? Because the markets are forward-looking. Now, what that means is when people are buying and selling and making their decisions in the market, usually these decisions are made not by what's happening right now, but what they expect to happen moving forward in the future.
Make sense?
So when we're about to go to war, or we initially go to war, people panic and the market drops. But when the end is near, or they believe the end is near, they start looking back at what do they think is going to happen to the economy now moving forward. Now their shift starts to go back to looking at things like corporate earnings and interest rates and expected economic growth. And that's why we get such a pullback in a good way, right, and a recovery. In other words, fear causes the market to drop. Economic fundamentals cause the market to recover.
Yeah, so with that said, not all asset classes react the same.
That's true.
Right? So stocks or equities, typically, as we kind of reviewed there, typically you have that short-term, pretty violent down, right? Followed by a subsequent recovery because of everything that kind of Dave talked about there. Now, things like commodities, right? Oil specifically, oftentimes you'll see things like that spike in times of war. And the reason for that is typically these conflicts are in energy producing regions. So that is why you see that initial spike. Now, here's an interesting one, Dave. I wouldn't have thought of this intuitively, but emerging markets, typically in this type of environment, in a U.S.-led conflict, they will actually recover even better in these types of environments, which kind of goes against what you're thinking, but it just kind of shows you that markets in general, they're adaptive and they're very complex. It's never just one variable that is making everything move.
And that's a big argument that we've talked about in previous videos of a diversified portfolio.
Absolutely.
Right. If you're trying to pick one of these, should I invest in emerging markets or commodities or large stocks?
Right.
The answer is yes.
Right.
Right. Because we don't know with this complex world economy, which one's going to benefit. So you need exposure to all of them.
Yep.
Right. So let's talk about moving forward. We do want to point out that we've shown you this chart, but not all wars or military conflicts are the same.
Sure.
Right. In fact, I would suggest that today's conflicts are a little different in that they're less clearly defined.
Sure.
Right. They're often for longer periods of time than some of the past wars.
Right.
Right. And this is, I think, to me, the biggest. They're amplified 24/7 with
Sure.
24-hour news and social media. So when you hear amplified, think fear amplified 24/7.
Yep.
Now, that means that you don't necessarily compare what's happening in 2026 with what happened in 1946 or whatever, right? However, what you do see is the broader pattern still seems to hold. And that broader pattern is initial volatility, think fear, followed by normalization and recovery.
Yep. So the natural next question, Dave, is what do you do? Or what should you do? I guess you could say. The number one thing that you should do in these types of scenarios is definitely you want to stick to your plan. Whatever your plan is, you want to make sure you stick to it and not get drawn in by the social media and the 24-hour headlines that you had mentioned. You also want to keep in contact with your financial professional, right? Oftentimes, these are the people that you should be leaning on to help you navigate these weird and uncertain times. And the reason why I know you should be doing that with your financial professional is that's exactly what we do with our clients. Okay, so stick with your plan and don't do anything, that deviates from that just based on one variable.
And I go a step further than that, because this is what we do, to your point, is you should be having this discussion with your financial professional before war breaks out.
Great point.
Right, not running to that when. So they need to run to us when there's an issue.
Right.
But when our clients run to us, we're talking about things that we've already discussed.
Absolutely.
Right. Now we want to have the conversation when things are calm and decide how we're going to act when an incident happens. What's the bottom line? War is serious. We don't want to underplay that. We're talking today about the financial impacts specifically to you.
Sure.
Right? So war is a serious problem. There's consequences to it, but history tells a more measured story with respect to how it affects the markets, which directly affects your 401ks, your IRAs, your retirement plannings, right? Volatility is common, so just know that's the norm, right? Stay the course, ride it out, and usually you will see a recovery once the
dust settles.
Once the dust settles, right?
Yeah.
Stay diversified.
Yep.
That's ideally most folks' plan. Follow your system, right? Stick to your long-term plan and continue to work with and talk to your financial professional about these type of events and developments.
Yeah. Well, thanks for joining us for another episode of Retire Your Way with ILG Financial. Don't forget to hit like and subscribe to get those notifications for future videos. And we'll talk to you soon.
Hi, Dave Lopez here. I want to thank you for watching our ILG Financial video series, Retire Your Way with ILG Financial. Just wanted to remind you, in addition to our YouTube video series, we also offer podcasts, 30-minute podcasts on different topics. You can check them out through our YouTube channel. You can also look at them through our website or any of the below listed platforms. Talk to you soon.